When we talk about risk in property investment, what does that actually mean? There's certain things such as market volatility. There could be unforeseen capital costs or repairs and maintenance on a property. There could be higher interest rates, which mean that you just simply don't have a buffer of funds to be able to service a property. So all of these factors that need to be determined up front to make sure that you have all bases covered. You may need to have emergency funds. If you're purchasing a second-hand property and you simply don't have a rainy day fund, if you have to replace a roof on a house, that's an unforeseen capital cost. That could be 20 or 30,000 that you just didn't allow for. So when you purchase a property, we need to make sure that you're covered on all these aspects so that you know what you're getting yourself in for. With a new build property, for example, you can mitigate some of these risks because you have builder's warranties, structural guarantees. You often have less associated costs to get into the market besides that upfront price. So it's very important to do your due diligence up front and be educated before committing to a specific property solution.